Okay, and for more on the big reset at the RBI and more importantly, what it means for stakeholders of the Indian economy, we've got a special lineup of guests for you right here on India Tonight. Joining me, Kishore Biyani, Group CEO of Future Group, veteran banker Naina Kidwai, and President of CII, Naushad Forbes is here with us as well. All three of you, thank you so much for taking time out for us. Ms. Kidwai, I'm going to begin by asking you, the new RBI governor, many saying, giving growth a chance. Were you surprised, though, that we saw a rate cut today, considering a majority in the market were betting actually on a status quo?
I must admit that I was very much on the side of the fact that a rate cut would happen, because if you look at where inflation sits today and the 100 basis point decrease in CPI, a good monsoon and at least food inflation looking well on the way down, and the fact that we have oil prices still in check, there would have been, to my mind, little reason not to give this 25 basis point cut. And in fact, I would like to believe that as this trend continues, of course, we have global headwinds possibly at the back of the US election. But if this trend continues, given domestic markers, I would like to believe another 25 basis points is possible by the end of the year, given just where we are at in terms of inflation as a marker. And if you then marry it with the fact that investment is still not where it should be, and the government's huge program on public investment, which was actually brilliantly done, where the oil bounty of both excise taxes, which were up on oil, and oil prices holding, government the whole of last year put a lot of money into investment, and that it was 21% growth rate last year. That is clearly tapering off. So we need private investment to come in, and lower interest rates, better transmission of these interest rates will provide the kicker we need for the private sector to begin to step in where government spending itself is having to slow down.
Mr. Biyani, what about you? Were you also in Ms. Kidwai's camp? Did you expect this was coming, or were you pleasantly surprised?
No, I'm not at all surprised. We thought a lot of elements have come into place to kickstart the economy, and this was one of the elements which was missing, which is lowering the interest rate, or at least signaling that we'll be having a regime which will be looking at interest rates, which will be helping growth. And so I think things have now happened. So this was one of the elements which was missing. I believe this will trigger finally what we are looking at, the kickoff of the economy in all the senses.
Mr. Forbes, what's India Inc. Saying collectively, the first cut we're seeing in 6 months?
Well, I think it sends a very positive message of sustained focus on inflation and sustained focus on seeing a moderation in interest rates going forward as inflation stays within control. Over the last, so I would very much see it, by the way, as a continuity and not a break with the past, as a continuity of past policies and an implementation of the government's inflation target. The government has set a target, as we know, of 4% plus minus 2% for inflation. We're currently at around 5%, so we're comfortably within the range that we've been set. And the Reserve Bank, I think, has by its 0.25% interest rate cut, this is I think it's the 6th or the 7th rate cut since January 2015. It takes the total rate cut to around 1.75%, and that, I think, is only a reflection of sustained macroeconomic fundamentals, of sustained improvement in inflation and inflation expectations going forward, and an expectation that that as an economy we're very much in the space now of being a low inflation, low interest rate economy.
Ms. Kidwai, I wanted to just talk about, what's seeming like an apparent dichotomy, though, if you were to just listen to what it is that Dr. Patel had to say. On one hand, we've seen the rate cut today, but on the other hand, the central bank has also said that, hey, look, upside risks to inflation are very much at play. So in that sense, do you not see the dichotomy there?
Well, I think he's right to manage expectations because at one level, while domestic inflation looks well on the way down, there are still global headwinds. The US election, we have in the past seen just after US elections, rates tend to go up. And there are those pressures which become difficult to factor in because those are not factors within our control. So I think it's coming from there. We do have a second aspect of inflation which I believe will kick in later, may not be evident as early as this year, and that is GST's potentially inflationary trend. A lot will depend on where the GST rates settle, but if it's north of 18%, there is a fear that there may be temporary inflation effects. I believe those would really be felt more like mid-2017, but those are also factors that need to be built in. There is the whole area of consumption-led inflation, which at the moment is positive because rural demand is up. The effects of OROP, the effects of the pay commission, as these begin to flow through, will lead to better demand, all of which is very strong and good for growth for our economy, but can have inflationary effects at the edges. So there are a lot of moving parts, as is inevitable. I'm delighted to see that there is actually a full focus on inflation numbers as they exist today, and therefore the front loading of getting these interest rates down is great. But we do have risks going into 2017 and I think that is really what RBI was pointing to. And we can see that it is something that RBI will look at very closely. I do want to also come in on another very important aspect, and that is the way our banking sector itself is looking, and NPAs, which has also been a part of the discourse from RBI for obvious reasons. The good news there appears to be, I was just seeing a CRISIL report, which is for the first time pointing to the fact that corporate performance is looking better. They've had more upgrades. I think it was 661 upgrades and 553 downgrades. So net corporate performance beginning to look up. And while there is no significant deleveraging of the economy, maybe this is a trend which is indicating that things are beginning to look better, both in terms of corporate performance and which in turn obviously goes and feeds back into the way banks are seeing NPAs as well. So that becomes a very important trend as well, because one of the reasons for the very poor transmission, after all, RBI, as Naushad very correctly pointed out, has seen a number of cuts over the last year and a half, which have really not been transmitted back into the way you and I see the rates which companies borrow at or we borrow at. And that can only happen with the strength of the banking system, the NPAs going down, and the margins at banks remaining protected, so that banks feel comfortable and confident and beginning to cut interest rates that they're transmitting into the economy. So we have to look at it from both sides.
Okay. Well, we have to look at it from both sides. So, Mr. Biyani, I want you to sort of come in. You know, you have your ear to the ground when it comes to the Indian consumer market. Give us a color on what the ground realities really are and what this 25 basis point cut could really do in terms of being able to revive demand.
I think it's a signaling of a policy that we are going to look at rates for growth. And I believe that is what can trigger off some consumption, because there is a EMI which people are paying on their properties, on their cars, on the other consumer durables which they buy. And I think that if the interest rate comes down, the amount of money they can spend on something else is there in their pockets. Secondly, I believe real estate, especially the residential market, has been at a very low side. And I believe there has to be a demand kickoff which has to happen there in that sector for the rest of the economy also to get a jump. I believe this will create some demand in the residential market on the real estate side. Secondly, even on the consumption side, on the larger ticket items, we will see some demand going up. Also, it's more about a positive psychology. When a customer feels that they have some money in their pocket, I think they tend to spend they tend to start spending. And I believe this is more of a directional policy that the interest rate will be much lower as we go by, and that should help to kickstart the consumption.
Mr. Biyani, for FY17, for example, there are many who believe that we could see perhaps even another 50 basis point rate cut. What is your own, sort of assessment? And to then that extent, how do you see it sort of feeding into this consumption boom that, folks from your industry often talk about?
I'm not a financial expert, and I don't understand the nuances of the markets in that sense.
Okay.
But I believe as a customer, we tend to, and as a borrower also, we believe it helps us to invest more into the business because of the interest rates. Growth is always a part of doing business. At the consumer end also, it's a very positive thing. So at both the ends, I think a lot of people will look at setting up factories, production and manufacturing units, because consumption ultimately leads to development. It creates manufacturing, it creates services, it creates a lot of jobs, and it kickstarts the economy. So consumption can drive economic growth. That's what is our belief, and low interest rates can help us to grow the consumption.
Ms. Kidwai, let's ask you then. Do you believe that today's rate cut is good enough to kickstart the investment cycle? And I'm guessing you'd say no, because it's really a coming together of a bunch of factors. But let's put it this way: where do you think we are in the economic revival cycle right now?
So, you've taken the words out of my mouth, Dani, because you're right. It's not enough in itself to look at an interest rate reduction of the repo rate from RBI. The issue of transmission, as we've been discussing, has to be pretty much more robust than it is. We also need to have the whole demand side and consumption side go up. The good news there is that it is going up. And and we have other aspects which will help it go up as OROP and the pay commission play out. GST itself, as it irons out a lot of the dichotomies in tax rates, should ultimately lead to more money in the hands of consumers, which will also help. But that, of course, would kick in more like a year and a half later in terms of the effects that we feel. So I do believe that, in answer to your question on where are we going, I do believe that that kickstarting process has happened. I think government's own public investment program has clearly helped. And we're going into this next cycle with a lot of strength, because the fisc is looking well in control. I mean, I must say, I thought that the 3.5% was looking very, very tough as we entered the year. But if you look at where we are today, and there's both good and bad things that are being held together by the government, the big positives here are this whole money that's come in through the unaccounted monies effort which the government has made, which is really laudatory. We've got a sizable part now which is going to help us as we go forward, at least this year. There's still money to come in. We don't know how much on the spectrum front. Disinvestments, maybe government doesn't achieve its full target, but at least there's some action there. So all in all, you've got some of the positives. And on the other hand, yes, while taxes and collections have been low, there is still at least some buoyancy in the excise rates. So net, clearly there is a balancing act. I imagine that's why the public investment cycle is a little lower this year than it was last year. But there is still a commitment from government to do the highways and infrastructure and investment therein. So we go into a cycle with a good controlled fiscal deficit, very strong foreign exchange reserves, oil still looking very much under control. So our import bill not going to be a disappointment. Gold looks like it's down. So many positives. So my long-winded answer to your short question is that I'm very bullish on the year as we go forward, which will translate to better corporate performance and strong GDP.
Mr. Biyani, I also want to ask you, do you think that today's rate cut somewhere is also reflective of the fact that the RBI and the government may now be coming on the same page when it comes to interest rate decisions?
I think it seems that ultimately you have to get all the elements right. And one of the elements which was missing for all this while was on the interest rates. I believe this element also coming together, like Naina ji was mentioning about, a lot of things are happening on the government front. A lot of decisions have been taken. We have had a kind of economy which is looking good, the oil prices, to the rural economy, to the monsoon, to the investments. I think a lot of things have come together, and I believe this also had to come into place, and that seems that we are getting there.
We're getting there. I'm going to thank each one of you. Thank you so much, Ms. Kidwai, Mr. Biyani and Mr. Naushad Forbes for taking time out for us this evening here on India Tonight.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.